Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a senior manager here at Schwab, and this is Getting Started with Thinkorswim. And today I wanted to talk about options trading. And the job of an options trader can get complicated pretty quickly when we start to layer in additional legs into a trading strategy. How much can a strategy make? How much can it lose? How are price and time and volatility likely to impact that trade? And how does it fit in overall with the portfolio's performance? Well, wouldn't it be nice if we could just put all of that on a chart that just tells us how that trade might perform under changing market circumstances? Yeah, today we're going to be talking about what may be, I don't know, the trader's best friend on the Thinkorswim platform. It's known as the risk profile tool, and it does lay out a chart that is interactive that allows the trader to just layer on a bunch of options trades and explore it, see how much it can make or lose. It's really going to be a great discussion today. I'm very much looking forward to it. Hello, everybody out there on YouTube. Great to see the returning veterans. Great to see CVH and Eva, Wiley, and everybody else. Thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. If you're watching the webcast for the very first time, whether live or on the archive, welcome. It's great to have you here. And for those of you who are watching on the archive, if you'd like to join us in the live discussion, it kicks off promptly 3 o'clock Eastern Standard Time on Mondays. We'd love to have you here for the live discussion if you want to join us. And as a final heads up, my very good friend Ken Rose is hanging out in the chats with the live audience. He's going to be addressing any questions that are on topic that I can't get to during the natural flow of the presentation. Thanks for being there with us, Ken. And of course, Ken and I would like to also issue an invitation to you if you're watching live or on the archive. If you're not following us on X, please do. It's a great resource. Doesn't cost you anything, but it's the best place to connect with your favorite presenters in between these live streams. All right. Well, let's get into it. Before we can get into the discussion of the platform, of course, there are some risks that we need to be aware of. So bear these disclosures in mind. It is important information. So the information here is for general informational purposes only. Should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Options carry a high level of risk and are not suitable for all investors. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right. So with that said, let's set a bit of an agenda for the day. Really, we're going to be exploring the risk profile tool. So yes, I am going to be making the assumption that there's a little bit of an understanding of options. This one's targeted for a tool for those who are more of options traders in our audience. Now, I would like to know, as we set the agenda, how many of you in the live audience, just chat in yes or no, are familiar with this risk profile tool? Go ahead, chat in your thoughts on the tool. I'd like to get that sort of feedback. But what we're going to be doing, number one, we're going to go to the platform and set up just a brief example option trade so that we can then take that and import it into this tool and explore how this tool might help the trader gain some additional insights into the potential performance of that trade. And then we're going to dig deeper into the functions of the tool. All right. So we're going to get very familiar with this risk profile tool. Really looking forward to it. Yeah, Eva says quite familiar. Rob, yes. BJ, yep. Good. All right. So we have some veterans here that I can throw some questions out to, and you can help me out if it's needed, and if you're comfortable. Let's go right to the Thinkorswim desktop software platform. So this, if you haven't downloaded it, this can be downloaded from inside your Schwab online account. Just go to the trade tab and look for Thinkorswim. It'll guide you right through the download of the software. There's no cost to download the software, but one of the great functions of the software is we can learn these things in a simulated trading environment before moving to the management of live trades. So everything that we're doing today is in that simulated paper money environment. So let's just set the stage. Just with a quick glance at Tesla. Tesla, yep, been taking its lumps over the last 12 months, but recently, price has been spurred higher by an apparently satisfying earnings announcement and a little bit of news as Elon Musk is reporting from China. Apparently, some progress being made there for fully automated or self-driving vehicles in China. We'll see, but what that may mean net for a technician here is that we've pushed up above a previous price ceiling. You'll notice maybe that 180 level was a price floor acting as a recent price ceiling, gap up above that. So let's say that our options trader spots that, and they've decided, well, let's put on a trade that may benefit if price just holds where it is doesn't fall back too much or just advances from there. We're going to be putting on a bull call spread. So I'm going to go to our trade tab. Make sure that we have our symbol here, Tesla. Mine populated there by default. You can type that in, of course, in your own paper money account. But let's go down and maybe look for the options expiring in 18 days, the 17th of May. Okay, so I'm going to open up that part of the option chain. Let's set our spread to single and just quickly discuss this example trade. I'm going to go down to the maybe close to at the money, slightly in the money options. And let's say that our options trader, recognizing that we've just pushed up above that 180 resistance, maybe they're thinking, hey, let's do this. Let's buy the 175 call, giving us the right to buy shares at 175. And then we're going to sell the 180 call, taking upon ourselves the obligation to sell shares at 180. Because if we can buy at 175, sell at 180, there's a $5 profit there to be made, minus whatever it costs to set that trade up, if it works out, right? So that's our example bull put spread. Now, a number of ways that we can put that on in the platform. A quick way here is to change our spread from single back to vertical, since this is a vertical spread. Go to the selected strikes, and again, this is just an example. This is not a lesson on how to do options trading. It is instead an introduction to a tool that allows a trader to analyze potential options trades. Okay, so and actually even existing options trades, but I'm going to go to that 175 180 strike pair, and I'm going to click on the ask price, and that's going to construct in my paper money account a default order for one contract on both sides of this bull call spread. Okay, buying the 175 call with a +1, selling the 180 call -1. Looks like it might be about a 355 debit at the moment. Let's say for the time being, I like that, nice round numbers. How about we move this? Let's say that the trader is willing to spend 370 to set this trade up. And actually, let's lock that in at 370. Okay. So we're going to change our price here to 370. Make sure that the lock is set there. And the trader could go ahead and place the trade. However, let's now put ourselves in the shoes of a relatively novice trader. But even for our advanced traders, they might find this tool to be incredibly powerful. Well, with this strategy, and really any option strategy, there are a number of things where the trade may go well, it might go poorly. How much can we make on this trade? How much can we lose on this trade? And under what circumstances might those profits or losses be realized as we move toward expiration, right? Well, all of that can actually be analyzed through a tool on Thinkorswim known as the risk profile. So stay with me here. Watch this. Before we submit this trade, confirm and send this trade, we're just going to come up to the trade itself and right-click on it somewhere. It doesn't matter where, just right-click on it. And we're going to select Analyze Trade. Okay? And what that's going to do is take us to the Analyze tab. And if we haven't landed there, we want to make sure that we click on the risk profile. But in any case, we're left with this chart. And what this chart is, this chart is immediately starting to address questions that the trader might have about whatever strategy it is. In this case, it's just an example long call spread or a bull call vertical, but it really could be any options related strategy. But what we're looking at here is, we're addressing questions like, well, what if the stock were to go up? How would that affect the profit or loss scenario for this trade? What if our stock price were to go down? How would that affect the profit or loss scenario on this trade? So let's start with those basic questions. And you'll notice on our chart here, there's a grid to it. Down at the bottom are potential price levels. Those intersect right now with a dashed vertical line right here. This is the current price of Tesla. So if I look at this, I can tell right now, Tesla's trading at 192.51, and you're going to see that number change as prices change on the stock. And I can ask myself questions like, well, what if the stock were to go up? Well, that's toward 195 or 200 or 205. Or what if it were to go down 190, 185 or so on? How might that influence profitability or loss potential on our trade? Well, the other axis on our grid here is potential profit or loss. So you'll notice this ranges up to, in this case, for this trade, it's capping out above 200. It's capping out around 200 because with this trade, the way we structured it, our options traders in the audience here know, Cameron, you can't make more than 200 bucks on this trade, right? Nor can I lose theoretically. Now, these are theoretical maximums because, if we tinker with the trade or we get assigned, things can change these theoretical maximums. But yeah, profit's not going to go above 200 bucks on this. As a matter of fact, it's going to be short of that. So there's no sense in this grid going any higher. At the same time, there's no sense in this grid going any lower than minus $400 because if we're spending 370 bucks to get into a vertical spread, how much is the most we can lose? Well, it's going to be $370. So you'll notice there's a line here, and I want us to turn our attention to this orange line first. This line is showing us how our trade might work out at different price levels as we get to expiration. So as I hover over that orange line, you'll notice, first of all, a number here in the little box in the lower left-hand corner. That's the expiration for the options that I've selected. So you'll notice these are 17th of May. It says 18th of May. One of these contracts really expires. This is going to the Saturday, right? This is our Friday expiration, Saturday immediately following. And you can see some numbers here showing the potential for loss as I'm pointing at the chart at this horizontal line, representing how much we could potentially lose on our trade. Or I could move over here and I can see how much we could possibly make on our trade. Notice our orange line changing from negative up to positive. Yeah. So this is a profit or loss chart as of our May expiration for this option trade that we just structured. So for some traders, that's extremely helpful, especially if we're just trying to wrap our mind around how much a strategy can make or lose. Now, I'm using a vertical spread as an example today, but we could layer on additional legs and it would adjust automatically the profit or loss scenario for that new whatever configuration of options trades we choose. All right. So let's just look at the numbers associated with our profit or loss. Well, with a bull call spread with strikes of 175 and 180, where do we know maximum gain is most likely to be achieved at expiration? Well, we need to be above 180 at expiration. So if we look at the 180 level on our chart, you'll notice that intersects with the beginning of our maximum theoretical gain on our trade. And if we're at 185 at expiration, it doesn't change. We're at $130 maximum theoretical gain. If we're 190, $130 maximum theoretical gain. Well, what if we're below 175? We're not above our vertical spread, but below our vertical spread at expiration. Well, now we're in maximum theoretical loss territory, and we can see that displayed graphically, if that's the way the trader prefers to see things, or visually, but we can also see it numerically. So really, just at a glance, a very nice visual breakdown of the potential for gain or loss at expiration on this vertical spread. So that's what the orange line is. Now, what's this red line? We notice the red line is intersecting with 0. What this is telling us is that if we happen to be right here, let me hover there, and you'll see that's intersecting with 178.70. Okay, that's our break-even point on this trade. It's intersecting with 0 profit, 0 loss. Why is it at 178.70? Well, when we have a vertical spread, in this case, a bullish vertical spread, we know that we can make 130 bucks on the trade maximum, right? That's if we're above 180. Well, if we're below 180 as we get to expiration, that must mean we're somewhat short of our maximum theoretical gain. How far below 180 can we go before we've surrendered $1.30 in potential gains? Yeah, $1.30. Yep, so $1.30 maximum gain subtracted from our 180 upper strike gives us 178.70, and that's intersecting just perfectly with this red dash vertical line. That's our break-even point. So not only can we see how much we can make, or lose, and the price conditions under which we might make or lose that amount, we can also see where the break-even point is on our trade. And in between max gain and max loss, we could also see how the trade is likely to perform. If we fall, let's say we're moving toward max gain, but we don't quite get there, and we're at $179.45 stock price at expiration. Well, I could position my cursor here, let my eyes drift down here to my yellow expiration number, and what kind of situation are we looking at there? Looks like we might be at about $75 profit. Yep. Still profitable, but not at max gain. Similarly, we could do the same thing with prices above 175, but below our break-even point. We can see how much we might be losing at expiration. Now, obviously, if we allow this to get to expiration, and our long option is in the money, our short option is out of the money, short option might expire worthless, but our long option would be exercised on our behalf, unless we leave do not exercise instructions, and we might wind up owning some shares, calling some shares. So we have to be aware of that, okay? But that orange line, great insight into potential profitability, potential loss, where's the break-even point, how would we do it, different levels in between max gain and max loss, a lot of things being summarized there. So what is this blue line? Well, this blue line is some date other than expiration. So you might be wondering, well, Cameron, we're just putting on this trade. I wonder how this trade would do, today. If the stock started to move, there's only 45 minutes of trading during the live discussion right now, only 45 minutes of trading left. But what if we were to get a nice bounce upward before close of trading today? Let's say that we went up to 195 bucks. Well, I can actually just position my cursor here. Let's just try to get it as close to 195 as possible. It's going to move around a little bit because the markets are open. But now look back down there in that lower left-hand corner again, and you notice there's a different date in blue. It says April 29th. That's the day that we're holding this discussion right now. And it's also telling us, hey, Cameron, if you get a move up right now to 195-ish, you might be looking at maybe a $7-ish profit as this trade is trying to dig its way out of the hole that the bid-ask spread might leave the trader in initially. So yeah, it's a bullish trade. It's likely to benefit if prices rise, but not by a lot in those early days. Okay? Well, where's the break-even point today? Well, we're a little bit in the hole right now on the trade due to most likely the bid-ask spread. So just moving up, you'll see us intersecting with a break-even point right here that's moving a little bit because prices are moving. But that's the break-even point for today. And you might, but now we might, let's start to manipulate this tool a little bit more. We've kind of been going with the defaults. We can see how much we can make or lose at expiration, make or lose today. Well, what if we were wondering, well, what if the price were to go up 10 bucks over the course of the next couple of weeks? Now we have the element of time decay entering into the equation plus price activity, but we're not all the way to expiration. How would our trade be doing then? Well, we know the stock is really already where it needs to be. We need the stock to be at or above 180 as we get toward expiration. Right now we're at 192 and change, but down here we can start to play with additional variables. So first thing, we can build in some time decay. So watch this. As I click on the little date here, let's push this forward a couple of weeks. And today's Monday. How about we go to Monday, May 13th? That's going to move. That's going to build in some time decay. And if you keep your eye, maybe let me do this. Let me just back it up. Keep your eye on the blue line because that's what we're manipulating. With the stock already where it needs to be, if price doesn't change, but time goes by, each day that we get closer to expiration, this is actually working in the favor of this trade. So just the passage of time might actually boost the performance of this trade. So watch what happens to the relative positioning of our blue line as we just build in the assumption that 2 weeks have gone by. So let's move out to May again using the little right arrow. I'm going to choose May 13th, and you'll see that our blue line has skipped up. And as we move around on it, you can see even if we're still at around where we are right now, around 192, if you look over here at our profitability or our profit or loss area, you can see, first of all, that we're now working with May 13th rather than, April 29th. And you can also see that we're already in profit territory. Just from the passage of time, we didn't require that price went anywhere. And as a matter of fact, it's actually about 50 cents lower than when we first started our discussion a few minutes ago. So this tool allows us to build in assumptions for price. It allows us to build in assumptions for time, and we can see a new profit or loss curve for both of those variables. And as we move our time closer to expiration, and notice these contracts expire on the 18th of May, we're now within 5 days of that expiration. What do you think might happen if I hit the plus sign here and move this up to the 14th of May, from the 13th to the 14th? Where we're going to see that blue line snug itself closer to the expiration line. The closer we get to expiration, the more this blue line fits itself to expiration, because it's just going to look like that ultimately. So let me click on the plus sign, and you can see that moving toward expiration. It's literally redrawing profit or loss potential scenarios at different price levels for a different date, closer to expiration now. Okay, so how about we dial this back? Let's move it back, a week or so that we're now looking at, this is now May 8th. And what's the final variable that the trader might want to be aware of that could affect the performance of their portfolio, of their position? We've talked about price, we've talked about time, and you're probably asking, Cameron, what about volatility? Doesn't volatility play a role in the performance of options trades? Yep. Well, if we come down here to this little gear icon, I'm going to click on that, and you'll notice that adds a couple of additional fields here. We can adjust price right here. So yes, we could even just click on the plus arrow, and instead of following along the line here, if we click the plus sign for our price and start adding price, or if we just type in different price levels, it's going to change the performance curve. So you'll notice here it's moved us over to our 195 and giving us and intersecting us with what potential profit? About $42. All right, that's if price is moving. Let me just adjust. Let's put that back to about where the stock is right now. I'm going to dial that back down to about 192. Okay. But what about volatility? Volatility, as it rises or falls, can influence the performance of an options trade. So how much might it influence this trade? Well, how about we take this up on our chart? Now, as I do this, where do you see the line going as I increase our volatility? And the one thing that might be visually the easiest to follow, where do you see our break-even line going? Rising volatility levels on this trade is actually lowering the performance of the trade over, not over time, but as volatility levels rise. Yeah. So this is a trade that net is negatively influenced by rising volatility levels, and it's moving this break-even point to the right. Okay. Or in other words, you can see it's also dropping our profit or loss curve. So this tool, very powerful tool that allows us to analyze not just how much we can make or lose on a stock, on an options trade, but how much we can make or lose on that trade as the stock price moves, as time goes by, and as volatility levels change. Now, if you've gone into the tool and you've tinkered around quite a bit and you think, oh man, I've got it all messed up, that's okay. There's a reset button right up here. I'm going to come up here and click on reset so you can see what that does. It always gives you an option, it asks you, are you sure you really want to do this? I'm just going to click yes. And it just resets everything again. So, I had changed my price assumption and I'd locked it in at 192. Now it's just gone back to showing me the current price of the stock and moving with current values of the stock. Now, there are a couple of other things that I wanted to discuss today. And that is these things called slices. Okay. Now, slices are these blue dashed vertical lines on the chart. And they're called slices. You might think of it this way. It's the way I think about it. It's almost as though the chart is being sliced up by default into 4 quadrants, right? With 3 dashed vertical lines. But by default, what these are doing is it's just drawing in a line. First of all, the first slice is just the current price. And then the 2 slices off to the left and the right are that price plus or minus 10%. So 192.07 is the current price. 10% above that's going to be about 211.20. 10% below that's going to be around 172.80. Obviously, that changed a little bit, so my number is a little bit different there. But that's what those slices are. And the slices can do a number of things for the trader. Now, I'm going to open the price slices down here. And the first thing that it might allow the trader to do is anticipate how much they may profit or lose as price goes up or down a given amount. So if I'm looking at the price slices down here numerically, that's all it's doing. So you notice 192.07, 192.07, 172.86, 172.86. That's what those slices are. So I can look at this is where we are right now. Well, what if price were to rise $211 up to $211.33, up 10%? Well, I can see we'd be looking at maybe an $80 profit. That is according to today's date. Well, what if it were to move up 10%, but on a different date? Let's move this out. How about we move it out a week? Well, that time decay is now moving in, and we've gone from an $80 potential profit to 101 unrealized gain on that date. So our slices are showing sort of an intersection of price and time, but also we can manipulate volatility. So we can see numerically the influence of changes to our option trade. So let's actually get ourselves a little bit more space. You know what? It's actually fine right there. I'll just leave it right where it is. But let's say that that our volatility were to go up. Keep your eye on our anticipated profit as of May 6th. Looks like we might be looking at about $100 profit if the stock price were to go up 10% up to 211. Well, what if our volatility were to go up at the same time? Let's dial that up. What do you see happening to the profit? You see it's chipping away. Rising volatility levels are chipping away at the performance of our trade. And you'll also see that reflected in the positioning of this blue line at the 211, 10% higher level right there. Okay. So you can see as I dial up my volatility, I can see that blue line sinking down along that dashed vertical line, the 10% level. Okay. So those are our slices. We can see numerically impacts of really all 3 of our variables. We can adjust time, we can adjust volatility, and yes, we could adjust price. But one other thing that I wanted to discuss today is the probability of certain outcomes on our trade. You know, let's go ahead and hit our reset button again. Just hit reset, just resets everything across the entire tool back to the defaults. And let's just let's ask ourselves basic questions like, I wonder what the odds are. What is the likelihood that we actually have maximum gain at expiration? What's the likelihood that we actually have or realize maximum loss at expiration? What's the likelihood that we break even at expiration? Okay, well, those slices may come in handy for determining those things, especially when combined with this date up here in the upper right. Now, some of you may have been looking and noticed that there are percentages in between our slices. There's 100 here, there's 0 there, there's 0 there. I'm going to change our date a little bit. Let's switch this out to expiration, May 18th. I'm going to push this out to May 18th. And then I'm going to move my slices. Now, as soon as I change this out to May 18th, you'll notice that our percentages changed. So let's talk about what these percentages mean before we make any changes to our chart. So you'll notice, for example, here's the current price of the stock. 10% above that is at 211.76. And then there's this number in between, 25.36. What this is telling us is that as of May 18th, there's approximately a 25.36% chance that our stock price winds up somewhere between where it is right now and 10% higher. There's about a 23% chance that given that much time, we may even be more than 10% higher, about 23% chance that we can get up above 212 by that May 18th expiration. Now, let's take the current price and ask a very different question. I'm going to move that slice over. You can actually just do a click and drag. I'm going to put that right at 180. Now think about the implications of these numbers that we're now seeing for this trader of this strategy. What this is now telling us is that, hey, as of May 18th, there's about a 40, let's round it to 45% chance that we're above 180. That's above our vertical spread, but still below 212-ish. There's about an additional 23% chance that we're all the way above 212-ish. So you combine those two, and there's about a 67% chance that we're somewhere above 180, which is in the maximum gain territory, the maximum theoretical gain territory for this trade. So what are the odds, I wonder, that we are in max loss territory? Let's grab this slice and move it over to 175. 175, as of May 18th, that's where we would be in our max loss territory, right? And there's about a 26% chance of that happening. So as the trader is analyzing this trade, they may say, wow, so I can make 130 bucks, could lose $370. Looks like there's about a 67% chance that I'll be in position to make the 130. There's about a 26% chance that I could lose the 370. And then in between that, there's about a 7% chance that I'll be somewhere either short of max gain or at least above maximum loss. That's what this represents. Okay. So, guys, there are a lot of powerful functionalities on this tool, but I think what you can see now is that a trader can take a strategy that they've been entertaining and just analyze it. It'll bring us right to this risk profile tool, which will give us some insight into how much can that strategy make, how much can it make, how much can it lose, how would the passage of time influence it. We could even address questions like, well, how much might it make 2 weeks from now if volatility has risen or dropped X number of percent, or if price has advanced or fallen a certain dollar amount. So many different ways that the trader might use this to analyze a trade. But one final thing that I wanted to point out here is that this can also analyze an entire portfolio's performance in advance. Let me show you this. Last tool I want to show you. Let's go up here and click on reset again. What we've been looking at so far is just how our one position is likely to perform. Well, within this paper money account, I'm actually looking at the margin portfolio of this paper money account. We have a range of options trades going on. And if I go to the Analyze tab, the risk profile, if I come right down here where it says single symbol, I'm going to change that to portfolio beta weighted. And instead of showing us a profit or loss scenario for an individual trade, if I change that to portfolio beta weighted and then benchmark that, let's say against the S&P 500, what we're now looking at is how this portfolio overall, including this example trade, it assumes that we add this new position on. But this is telling us how our portfolio is likely to perform through May 18th. If price rises, or if prices rise generally on the S&P 500, or if they fall. Okay, so let's I'll leave this the probabilities number up there on May 18th. But yeah, what can I tell about my portfolio knowing nothing about it? you guys probably don't even know what options positions we have within this portfolio. But if our yellow line rises to the right, or in other words, our profits are rising as the S&P is moving from where it is right now up to maybe 5,200, 5,300, 5,400. If profits are mounting, that's telling me, yeah, with whatever this aggregation of options trades that I have on, this is a bullish portfolio at the moment. Because the profit or loss scenario looks worse, if the S&P starts to fall, that's telling me, hey, Cameron, this portfolio overall is bearish. Yeah. So the trader can analyze and manipulate all the variables just like on an individual trade. We can analyze an entire portfolio of positions, or if we chose to, we could even look at different combinations of positions within that portfolio. If we were to come down here, we can add or remove individual positions. So, for example, let's see, we were looking at Tesla. Let's say we didn't want the Tesla position to be part of this discussion. We go to this Tesla trade and either uncheck it. Let's uncheck Tesla, and it's removed from the equation here. Or we can just delete the trade overall by clicking the X. But guys, I know this has been a little bit deeper discussion of a pretty advanced tool for some of you that are new to Thinkorswim. It might be a little bit of heavy lifting. This might be one of those webcasts where you make a mental note or write a personal reminder to yourself to go back and revisit it. But it is potentially a very powerful tool that for a trader, once they get used to its navigation, it can provide some very quick, powerful insights into how much an individual trade can make or lose, or how the portfolio overall is likely to perform under changing market conditions. Great tool. Everybody, time for me to let you go. We've accomplished what I set out to do today. But as I do let you go, just a couple of quick heads up. If you're enjoying these webcasts, first of all, make sure that you're subscribed to our Trader Talks channel. You can go down right below the display window right now, click on the subscribe button, or go down in the lower right-hand corner, click on that subscribe button. But that just allows you to get notifications when new webcasts are coming out. But the Trader Talks channel on YouTube is also the best place to find our previous webcasts, where those archives have been organized into playlists, into series. You can just find the topic that's intriguing to you, and then just explore that in detail there. But you can also join our live streams right here. Now, final request that Ken and I would have of you is to follow us on X. That is a great resource, a great place to get your favorite instructors' thoughts on what's happening with the markets, see what they're doing on the weekend or on their holidays. But yeah, if you reply to one of my posts here on X, I do try to reply back to you, and it just allows for more personalized interaction. It's not available outside of our live streams. Okay. CVH, you liked that? Great. Wiley, Linda, very good. Glad you all enjoyed that. Yeah, go subscribe, go follow. Thank you for, it looks like we have nearly 100 people watching the live stream right now. And how many people have already clicked the like button? 32. Thank you for doing that. That's really appreciated. To me, a thumbs up on YouTube or clicking that like button sounds like applause. That's how you applaud the performance of your presenters. It lets us know that we were on the right track with these presentations. So for my live audience, thanks for the thumbs up. For those watching on the archive, it still helps, definitely helps just as much. So click on that like button. That's always appreciated. It helps us out with the YouTube algorithm as well. So it's always a useful thing to do, and it doesn't cost you anything. It only takes a moment. Okay, everybody, go enjoy the rest of our webcast for the day. I will see you again next Monday for another discussion of getting started with Thinkorswim. I'll look for you in my other webcasts between now and then. Of course, I'll also look for you on X, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.